Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is sales returns. So, merchandise is returned for a refund or for a credit to be applied to other purchase. Special price reduction, called an allowance, may be given as an incentive for the customer to keep the merchandise rather than returning it. Accrue sales return and allowance at the time of sale. This topic here, it is based on US GAAP. Usually, most of the countries that work with IFRS, they they accrue sales return at the time of return instead of the time of sales. We will be working with both in our Excel file, okay? Otherwise, recognize sales return when they occur. That is how usually IFRS works, could result in overstated income in the period of sale and understated income in the return period. For instance, I sell anything on 2020 and return it on 2021. If I don't recognize an allowance here in 2020, my my income here will be overstated, and in 2021 will be understated. But and by the way, for tax, we we recognize the sale returns when they occur. So allowance is usually for US GAAP only or a few countries. So let's go to our Excel file and it will be easier for us to do that. So some journal entries here, we will be working with them. The T accounts, I love working with T accounts. And the income statement, sales revenue less sales return. So sales return is a contra account of sales revenue and equal net sales. Usually the income statement starts with net sales. We will start with gross sales only to make it easier. So during 2020, its first year of operation, the Scarping Corporation, my last name. So this is my fake company for all of our videos. And by the way, this Excel file is free and the link to download it is in our video description. Okay. So the Scarping Corporation sold merchandise for $6 million cash. So okay, let's record these sales first and let's consider cash. So our journal entry is debit cash is increasing our asset. Credit sales revenue increasing our net income. So here on income statement, sales revenue $6 million. We don't have T account for that because it's only here, so we don't need a T account. However, how much is the cost of goods sold or cost of sales, depending where you are? Sorry. This merchandise costs Hawthorne $3.3 million. That is 55% of the selling price. So we will end. Scarping use a perpetual inventory system. So our credit here is inventory. So $3.3 million and credit inventory because we are decreasing our asset, and debit cost of goods sold and expense. So credit here. And if we go to our income statement, our cost of goods sold is 55% of our net sales. Okay, so here we are good. Industry experience indicates that 12% of all sales will be returned, which equals to $720,000, 6 million times 12%. We will not be working with this number yet because this is the US based only. Customers returned 580 thousands of sales during 2020. So, okay, let's go to our sales return. Here we have two transactions. The first one, we need to give them back the cash. The second one, we need to add our inventory again because we will be receiving this product. So Sales return 580. We are paying cash 580. What if these sales instead of cash, what if it is on credit and we haven't received it yet? Our credit would be accounts receivable, and here, sorry, our debit here would be accounts receivable, and our cash here would also be accounts receivable. So, okay, let's add our inventory again. Our cost of goods sold is 55% of the selling price. So it is 55% uh, of this sales return. And credit cost of goods sold. Some countries they don't credit cost of goods sold. They credit a contract out of cost of goods sold. For instance, inventory returned or something like that. Okay, but in the US and in a lot of countries, we credit cost of goods sold. And then, uh, what do we have here? We have at the end of 2020, what do we have here? Uh, we have here that industry experience and also 55%, so we are good. However, industry experience indicates that 12% of all sales will be returned, which equal to 780. So our sales return would be 720. However, from now on, that is your gray. That's gray here. It is US GAAP. So usually IFRS we edit here. Usually for tax we edit here, but not for US GAAP and also some countries. Our sales return, our expense here should be 720. So we need to debit sales return. How much? 720 less 580. That is our actual balance. So 140. And what is the credit? The credit is a liability. I will give them the money back, but not now. I will give them the money back when they are expected to return it on 2021. So our refund liability is also 140. And what about our inventory and cost of goods sold? If I will return it in the future, I will increase my inventory in the future. So, and it will be 55% of our sales return. So this is an inventory account, estimated return. Why not inventory? Because we don't have the physical product yet. So it is an estimate return. And then we edit cost of goods sold because our cost of goods sold must be 55% of our sales. And then, okay, in 2021, we received this product back. So the first returns of 2021 will be this 2020, will not be the sales return of 2021. The sales return of 2021 starts only when this refund liability is over. So when we underquote here, we pay this refund liability. So okay, the first $140,000 return in 2021, refund liability and credit cash. Now refund liability is balanced. And then we need to transfer this balance here from estimate returns to inventory because now we have the physical unit. So here, 77 and 77 here. So our inventory estimate return will also be uh, closed, no balance, anymore. Okay, then let's create here. You already have it because I am creating now. Oh, come on. Inventory estimated returns. And here we will have the first 77 and then credit 77. So we have a zero balance here. Okay, guys, please subscribe our channel, like our video, like our Facebook page, Accounting Hub by Dr. Scarping. If you subscribe our channel, you will be the first one to know when a new video arrives. If you have questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.